Good afternoon, ladies and gentlemen. I'm Tony Katzigarakis, Commercial Director in the Corporate Reporting Solutions Group at CCH Australia. I take great pleasure in welcoming you all and welcoming our panel to today's update on APRA reporting for registered superannuation entities. With 4 quarters now behind us, with annual reporting just a month away, as well as the first quarter for the following period, it's a very timely session to run on the experiences of the past year and what's to come. Chairing today's session is John Creeley, who's the Chief Financial Officer of First State Super. And John will introduce our panel and speakers for today. Before I hand over to John, just some housekeeping. If I could just ask everybody to please switch off your phone or switch it off to silent. Secondly, in terms of questions, if we can hold questions till the presenters have finished their presentation. And then thirdly, all of you have a pack. If I could just highlight, there's a feedback sheet in there. If you can complete that at the end of the session, we take your feedback very seriously, and we use that to constantly evolve and improve these sessions. So without any further ado, I'll hand over to John. Thank you.
Thanks, Tony. And on behalf of Walter Kluwer's CCH and ASFA, I'd like to welcome you all to today's session. We're very fortunate today that we've got Mike Cornwall and Greg Brunner from APRA with us. Greg is the supervisor of the support division, and his specialty, if you like, is the chair of the internal superannuation group at APRA. And Mike is, if you like, the more hands-on guy with policy, statistics and international division. I've had the good fortune to sit in a seminar before with both Mike and Greg, and they are two people who have a really good in-depth knowledge. They've been with this project for a number of years, and I think that you'll surely get some value out of this today. The seminar is quite timely for where we are. As Tony mentioned, hopefully most of you are well advanced on your annual reports, if not finished. There's not too many nodding, okay. It's my pleasure to introduce Greg first, who's going to give you a quick rundown on how the session's going to work. The other thing I would emphasise is that APRA is being or attempting to be collaborative with the industry today. Today, Mike and Greg are here to answer your questions, but please, if you're wanting to make a political statement or some sort of commentary, this isn't the appropriate forum. The other thing is, if you're asking a question that's really at a granular level that probably only you and your fund is interested in, it's probably not the appropriate forum. APRA has other means of dealing with those queries. For those of you who are on the webinar, if you look at your screen in the bottom right-hand corner, there is a Ask a Question button. If you do that, it'll come up on the iPad they've loaned me for the day, and I'll be able to pass the question on to the speakers. So I'd like to ask Greg to come to the mic.
Thanks very much for that introduction, and I'm just going to again make another introduction, but just to set the scene a little bit, I think, for the day. Obviously, putting these standards in place has been a major exercise for APRA, and it was really based on our desire to have more information for our effective supervision. Now, obviously, there are some other things that have happened. There's the MySuper reforms and government desire for a lot more transparency in the MySuper product. And also some other agencies for whom we collect data have asked us to collect some information as well. I think another point worth making is that we did go through some extensive consultation when we were putting this framework in place. But I think there's a question really about whether people were sufficiently engaged in that. And I'm not using that as a criticism. I think there was so much happening at the time. The FOFA reforms were taking place. There were the prudential standards being put in place, and so this gives us an opportunity, I think, to make sure that what is in place is what we really want, and also that it's working effectively both for us and for yourselves. So the session really, where we've been having sessions in both Sydney and Melbourne. It's an opportunity for us to give you an update on where we are, where we're progressing in this whole development of the framework, and also some lessons from some of the first collections that we've had. I think what we'd like to do is, in terms of questions, is we're going to have three separate parts of the presentation. One covering past, present and future, one covering observations from the first submissions, and one on the current areas of focus. And we'll take questions at the end of each of those three separate components of the presentation. So it won't be too far in before you get an opportunity to ask questions. And obviously this is really something that we want people to do. We want people to get engaged and to ask questions. But as has been mentioned, if it's really detailed, if it's a really detailed reporting question, this probably isn't the right forum for that. But you know where to find us. You'll have our details, so those questions can be dealt with. So we're looking for more high level, more systemic issues rather than individual reporting issues today, but further opportunities to engage and talk in coming weeks. So Mike, I'll hand over to you.
Thanks, Greg. So just before I move on, if I just draw your attention, so just linking into what Greg just said then. So if you do have further questions, so anything that you need to ask APRA, in terms of the reporting collection, there's a dedicated email box for that. It's in your slide pack. It's super.statistic without an S, super.statistic@apra.gov.au. So I'd encourage you to send through any further queries that you have to that. But we can discuss anything we have today as well. So if I look back to when we were last here, in March 2013, just before the final reporting standards were released. So it feels right that if I give you a past, present and future story, I should start around then. And before I launch into that, I'd like to just thank those of you who sent through questions in advance as well, so we could build this session on the basis of what you actually wanted to hear. That was very useful. So thinking about the past, present and future, what I'll do is I'll run through what's happened since the reporting standards came into force on the 1st of July 2013. I'll talk about where we are right now, and I'll talk about what's coming next, and then we'll have an opportunity for questions on that first segment. So leading in first of all, this slide acts as a bit of a reminder of where we've been so far, and for those on the webinar, just to make sure we're on the slide that starts with what's changed since 1st of July 2013. So it acts a bit of a reminder of where we are so far, and most of the points I'm going to touch upon here have been expanded. We'll expand upon them as we go through the rest of the presentation. I'll run through this slide as a fair pace to ensure that we have time for questions later on, but you can take copies of this as you leave to refer to later on. So in July 2013, as I mentioned just before, that was the commencement of the first tranche of new reporting standards. So 6 quarterly reporting standards commenced on that date, and you've all reported on those, or many of you have reported on those 5 times now. In September 2013, APRA released the MySuper related reporting standards. So I'm going to refer to them by number, so 700.0, 702.0 and 703.0. And they were supported by the release of a reporting practice guide, SRPG 700, Superannuation Disclosure Reporting. I'm going to talk about that a little bit later on as well as a resource that might be useful to you. In December 2013, we consulted upon what I'll call SRS 711, which is a SuperStream benchmarking measures specific requirement for reporting there. And again, we'll talk about that a little bit later on in terms of where we go next. March 2014, many of you will know, was a fairly busy month for announcements in relation to reporting. APRA revised 6 quarterly reporting standards at that point in time to reflect information that we'd already disseminated through our frequently asked questions on our website. And again, I'll come back to frequently asked questions in a moment's time. In the same month, ASIC and APRA issued a joint letter on the operation of Section 29QC of the SIS Act. And for those of you who are familiar with that, I'd imagine many of you are, but for those of you who aren't, that governs really the relationship between what's calculated and reported to APRA and what you disclose to your members on the same basis through, for example, PDSs and annual statements. At the same point in time, we deferred the select investment option reporting requirements, which were intended to commence on the 1st of July 2014. We pushed them out by an extra year, and many of you will know we're consulting on those at the moment, and consultation on that will close on Monday next week. Again, I'll mention that in just a moment's time. There's also a deferral was a month of deferrals that month. It was a deferral of the expanded ABS statistical collection. So many of you will be aware that the ABS intends to, if you like, bulk out its statistical collection. And APRA, as the agency that collects for the financial services industry here in Australia, will be helping them with that. There'll be a consultation on that early next year. And finally, there was some good news in that month as well, where we extended the due date for submission of quarterly reporting standards temporarily from 28 to 35 calendar days for a transitional period until the 1st of July 2015. And that was really to give relief to the industry to get through transitional issues as they were being faced at the start of the reporting collection. In May 2014, going back to what I've just mentioned before, we deferred SRS 711, deferred until the 1st of July 2015. And that's because it's a super stream form, and part of the super stream package of measures were delayed by the government, so there was a deferral there, so we deferred our reporting standard accordingly to make sure that we weren't asking you to report upon something that was nonsensical at the time. We also made a further revisions to 5 annual and ad hoc reporting standards, again to reflect our frequently asked questions. And that's a process that we'll tighten up at the end of the year in terms of a formalised process that I'll talk about in a moment's time. In June 2014, final revisions to two reporting standards there. And in July, you'll remember that there was the commencement of the second tranche of new reporting standards. So a number of 4 quarterlies and a number of annuals commenced from that point in time. And we opened our consultation on the revised select investment option reporting requirements. So what I'll do next is I'll just run on to where we are now in September 2014. In order to ease the transitional burden on the superannuation industry, as you know, APRA has introduced its new reporting framework. It's been implemented in several phases. So phases 1 to 3 are now in place. Phases 4 and 5 I'll mention in a moment, but we'll just run through phases 1 to 3. Phase 1, as we've got on the slide, relates to a number of... so 30th of April 2013, SRF 001, which is a baseline form, very important form that I'll come back to in a moment's time. And we commenced 6 quarterlies and 16 annuals, many of which you're reporting on at the moment. Phase 2 was in relation to some of the MySuper information required in the reporting framework. And Phase 3 had a further MySuper-related form and a second set of quarterlies and annuals that commenced on the 1st of July this year. Phase 4 will represent the select investment option reporting requirements that will be introduced from the 1st of July 2015 and SRS 711, which I've talked about already. And Phase 5 will be the revised ABS statistical collection, and it's expected to commence after consultation in 2016. For those of you who are looking at that, they're not on the slide. They're just for me to tell you about. So where are we now? What I'll just do here is I'll let your eyes adjust to the different colours on the slide, and I'll just explain what we're going to do for simplicity's sake. We'll look at a 30th of June balance. So the majority of our regulated superannuation funds are 30th of June balances. That's not to say that I'm forgetting anyone who's not in that particular boat. We know that there are non-30 June balances as well. For simplicity, we'll look through what happens for a 30th of June balancer and where you are now, and we'll focus on the 2 blue items on the slide. And I do hope it's in colour for the people on the webinar. I'll mention which ones they are as we go through. So 1st of July 2013 commencing annuals, so 16 of those, and you're all, I imagine, working very hard at the moment to report to us for the first time on those. That reporting is due on the 31st of October this year, just over a month away. And similarly, as we move into the Phase 3 area, so 1st of July 2014 commencing quarterlies, so just 4 of those, but still, nonetheless, that's the first time you'll have been reporting on those. That's due on the 5th of November because we have those extra 7 days to report, and the first submission we're expecting to see through then. So I know, in essence, the industry is motoring hard on 20 new reporting standards right now, and I imagine there may be a number of questions on that as we go through. If I move on then and think about what's coming next, so I just want to give you 6 items to cover here, and I want to give you a flag for what will happen over the course of the next year or so. So if I start off with select investment options, and we've mentioned this before, to commence from the 1st of July 2015, we've consulted upon a revised set of requirements here. So for those of you who are familiar with it, you'll remember that there was a fairly extensive set of reporting requirements for select investment options that were released back in 2013. On the basis of feedback from the industry, we've had cause to reconsider exactly what we need to collect there and to reduce the size of that collection to reduce some of the reporting burden. So we reconsulted on that. That consultation will run from the 7th of July, and it will close on Monday next week. So I imagine that many of you or your entities, the people who you're representing here today, will be making submissions to us. We'll then consider those submissions over the course of a number of weeks, with a view to coming back to the industry with a final set of reporting requirements for select investment options in February or March next year for implementation on the 1st of July. And the good news here is that we're expecting that to be a significantly cut down set of requirements there. And those of you who are familiar with the consultation paper and documents around it will be aware of that as well. If we think about choice product dashboard, which is not specifically an APRA requirement, but we will be having a reporting standard that will support the choice product dashboard. That reporting standard will be called SRS 701. And in line with the tack that the government will take on this, it's intended that the Treasury will consult, so the government will consult with the industry on supporting regulations for choice product dashboard around Q4 this year, and we therefore intend to consult on a supporting reporting standard at the same point in time. So one reporting standard, and you can probably expect it to look broadly similar to a My Super product dashboard, pending any changes that Treasury might put through in terms of what's required to be collected there. So a fairly simple, straightforward form there. Again, that would be intended at the moment for release in February or March next year, with the intention being that will go live from the 1st of July 2015. So thirdly, I'd like to just mention Section 29QC, which I talked about just earlier on. So Section 29QC of the SIS Act, governing the relationship between information reported to APRA and information disclosed to your members, in essence, on an ASIC perspective. So in October and November this year, ASIC will consult formally with the industry in relation to the intended operation of Section 29QC, so the breadth of operation of that provision. We'll support ASIC in that consultation with industry. We'll be present in the room if you like. In November to January, ASIC will consider submissions made there, with the intention being that in March 2015 there will be a clarification of the final position of how that provision is intended to operate for the industry to implement. That means that when you're looking at your PDSs for next year, there'll be clarity well in advance of that. I suppose I should just caveat that to say that, in essence, what I'm doing here is representing the information that we've been given by ASIC, and of course we can't control that, so that's the intention as it currently stands. What's coming next in terms of the three other elements? So if I move the slide on, we'll also be, as I mentioned before, consulting with the industry again on an expanded ABS statistical collection to commence from 2016. Now, at the present point in time, it's not clear as to whether that will commence from the 1st of January 2016 or the 1st of July, and that will form part of the consultation that's undertaken with industry. It's anticipated that in Q1 2015 there'll be a consultation, so a discussion paper with supporting reporting standards put out for submissions by industry, with the final requirements anticipated to be released in the second half of 2015. Revisions to quarterly and annual reporting standards, I've already touched on this actually. So I mentioned that during the course of 2014 we've issued revisions to 6 quarterlies, 5 annual and ad hoc reporting standards, and then 2 further quarterlies in 3 different tranches. Now they were necessary to ensure that the information that was being reported upon by the industry reflected what we put out in our frequently asked questions, and it's our preference wherever possible, at the earliest possible opportunity, to reflect information from our frequently asked questions into the legislative instrument itself, so the reporting instrument, so that it becomes part of the law. Now, what we don't want to do is continue to have a piecemeal approach to that and keep feeding you through update after update. We can understand that that's a pretty frustrating process for the industry, and actually quite costly and time-consuming as well. So what we propose to do here is, after the first collections have been completed for the 2004 commencing quarterly, so after the 5th of November essentially, we'll analyse the information that we've been receiving there. We'll take into account everything that we've come through sessions like this today, and information that people have fed through questions that they send to us, and we will revise where appropriate the reporting standards as a whole collection in one go, with consultation with industry as necessary. So what you should expect to see is that in February and March, consultation on any necessary areas with industry will take place, and in April next year, the release of the final revised set of reporting standards will go out to industry. There'll be no surprises there because all of the information there will already be reflected in a frequently asked question, so we won't be telling you anything you didn't already know. However, of course, we will be putting it into the legislative instrument itself for clarity's sake. Nice segue there really into frequently asked questions, which is a regular ongoing process. And at the very end of today's session, I will just give you a flag as to where you can access those frequently asked questions on reporting for anybody who isn't familiar with them. It's reflective of industry feedback, so in essence, anything you tell us here today and that we get fed through our through queries and concerns that come through from industry, they get reflected in frequently asked questions where appropriate. So we have a rough filter that if they get asked a few times, they become a frequently asked question. Alternatively, if there's something that will affect the entire industry and we can see that immediately, we'll look to clarify that at the earliest possible opportunity. So what I'll do now is I'll close this first segment and we'll take questions from the audience and from the people across the webinar on what I've just talked about here. In the next section, we'll talk about our observations from the first rounds of reporting, and we'll talk about that a little bit more in terms of some questions there too.
Okay, well, at this stage, the webinar is quiet, so if there's anybody in the room who'd like to put up a hand. Okay, I think one of the issues that the industry have, and certainly the custodians and administrators have made, is that where we do have changes in reporting standards from APRA, there are significant lead times to address major computer systems where they have to rewrite routines or change reporting outcomes. Mike, have you got any comment about the trade-off between getting the information on time but giving the industry enough time to adapt and change? Or perhaps Greg?
Yeah, so first of all, it's fair to say that we recognise that there is a lead time with any change to a reporting standard or any new reporting standards put in place. We recognise there's a system build that needs to take place, and often there may be even changes to practices within the business itself to be able to obtain the information that we're requiring. In terms of, I suppose, your specific question as to what we can do about that, so first of all, when we consult, we ask for submissions on the practicalities of implementing the requirements that we're intending to put in place. So, for example, we're very keen as part of our select investment option reporting consultation right now to hear from the industry as to the change in burden that we put in place, first of all, in terms of reducing the size of the collection, but also exactly when that can be done, what the practicalities are of how that can be put into place. Supported by, I suppose, strong cost and burden-based arguments, we have a picture that we can then use, supported by not too much more than a general concern about burden is a bit more difficult for us to use. How does that go as answering that one?
I think so. I think the other thing that I think most people in the room should be aware of is that there is also a separate forum for AXA, which is the Custodians Association, and APRA. And so, where possible, APRA is obviously giving the custodians as much lead time as possible to work out what systems changes they need to make to where the forms are changed.
That's right. And one of the points I would make is that we are cognizant of the fact that by revising reporting standards as we go, that's not ideal for the industry, and that practice has ceased, so we will do that in one go at the end of the year, which I think should be far more workable for the industry as a whole.
Okay, we've got a question from Madonna Parfitt. Madonna wants you to confirm her understanding that we were not required to relodge the Q4 in APRA. Well,
it's a bit broad, that one. What do you think? Maybe we could try and unpack that a bit. What do you think she means, John?
I would have thought that, but I know that for a number of funds where they've put their Q4 returns in, their accounts haven't been completed. Consequently, when the annual accounts are finalised, the annual return will be different to the Q4 return.
Absolutely. So that's a recognised feature of the reporting collection. In fact, it's one of the reasons why we have annuals. It gives the industry the opportunity to have that hard close information as opposed to the soft close information from the quarterly. So quarterlies generally have a 28 calendar day, temporarily extended to 35 calendar day reporting window. Annuals, as you know, have 4 months, which will be reduced to 3 months in future years reporting windows. So we recognise that the information that comes through in an annual will in certain cases be different to that was put forward in the final quarterly, and what we're not looking for is a reconciliation between the two. Of course, that doesn't mean to say that you wouldn't be asked a question or two by either our statistics department or our supervisors if there's significant material differences. But in general terms, if you're looking at hard close versus soft close, that's a feature of the reporting collection that we're fully aware of.
Okay, Madonna, hope we've answered your query there. Anyone else from the room?
Jim Baker from MLC, Mike. You mentioned up there that there'll be some consultation from ASIC about 29QC in October, November. I recall seeing a slide, I think it was in the June similar update, that suggested APRA and ASIC would consult between each other before coming to consult with the industry. Has that actually taken place, that consultation between APRA and ASIC?
Thanks, Jim. Yes, it has. In fact, that took place in July and August. So if you like, the process there was an observed deficiency in what's required. It was put forward by industry and very well articulated. So the two agencies came together to consider their positions, and on the basis of that, ASIC will consult on it, if you like, a combined position between the two agencies. So you won't have the position where ASIC says one thing and APRA says the other. We never like to be in that position. We like to be joined up. So on this one, you'll genuinely see a joined up approach where the two agencies have discussed in advance.
There. Okay, I might ask Greg to take over for this.
I have another question, Mike, if I may.
My apologies.
Up there you also showed a date of the 5th of November for the lodgement of annuals. That appears to be 36 days after is that a correct date, or should it be the 4th of November?
Well, have you just pointed out an error in my slides, Jim?
No, Mike, maybe you can't count.
Well, I do apologise. Let me clarify that and come back. In fact, what I'll do is I'll come back through ASPA to put a message out there if that's incorrect, because it shouldn't be. So, yeah, thanks, Jim.
Okay. And I've had a fat finger error on the iPad, so if we could get one of the technical guys to give me a hand, please. But I'll ask Greg to come up while we do this offline. I've just lost the screen.
Thanks for that. And the second part, we're really going to go through and have a look at some of the observations from the first submissions. The first point that we wanted to make here is the reporting purpose. I've already touched upon this, that the fact that our expanded reporting collection is being primarily used for prudential purposes. But I think the other thing that we really need to be mindful of is the publication purpose. APRA's desire is to get a lot of this information out so that it actually shines a light and provides a lot more information to whoever might use it. So it might be industry participants, analysts, researchers, and the like. And we're moving towards doing that, and we hope to get out some information on My Super products fairly soon. There's been some discussions about confidentiality, but I think one of the things really to be mindful of is that we really want to have good data out there when we publish this data, and we've been putting in a lot of effort to ensure the accuracy of this data. Timeliness is also important. Timeliness has actually not been too bad in the collections. We've been pretty happy with the way that people have got their returns in on time. Of course, in the period coming up, people have a little bit extra time to do that. So what exactly are we doing in terms of reporting quality? Well, firstly, there are validations. There are validations built into the D2A forms, which try to ensure data quality sort of at the first level as you're putting information into the system. And then there are queries to our stats area. For the September returns, we received about 2,000 queries to our stats people. And certainly we're happy to deal with that. We want people to talk to us to make sure that the information that we're getting is correct. The third level is actually hearing from responsible supervisors. Responsible supervisors getting in touch with the funds to ask questions about the data. And you'll probably be seeing more of that as well. I know only a day or so ago at the Superannuation Industry Group, we looked at some of the data that is coming out of My Super collections and looking at what we're going to publish. And I looked at some of that and I thought there are clear outliers here. And I've asked the responsible supervisors to go back and ask funds whether this is right, because I look at some of it and it doesn't look quite right to me. So there will be inquiries coming back from responsible supervisors to funds. And certainly we encourage people to react to those positively and try and deal with them as quickly as possible so that we can get this data correct. And obviously for this current period, there's an extra month reporting time, which gives people an opportunity, we hope, to really go through this data and make sure that the quality is good. One of the things we've been grappling a little bit with in APRA is data quality issues in general. It's an item that is sort of on our register of risks, and we're encouraging funds really generally to put more effort into this whole sort of process of data quality so that we have good data for supervision and that we can publish good quality data as well. So on that basis, I'll hand over to Mike now and take us through for the rest of this section. Thanks.
Thanks, Greg. So what I'm going to do now is I'm going to run through, so first of all, if we think about which forms have been reported upon so far, I'll pull out 4 of those reporting forms and identify some of the key areas where we observed reporting deficiencies or difficulties. We'll think about, in terms of what's been reported on so far, we'll talk about a 30 June balancer again, so I have our reporting population correct here. And what I'll focus mainly on is I mentioned before, profile and structure baseline, which is SRF 001. We'll focus on that one first. It's a fairly important form for APRA perspective. We'll look at 533, which is the MySuper asset allocation reporting form. We'll look at 700 and 702, and they're 2 MySuper reporting forms, one on the MySuper product dashboard and one on investment performance in a MySuper product. So if I start off with 001, profile and structure, it's a baseline form. This is crucial to APRA's new statistical collection as it acts as the basis for determining which other forms should be allocated to your entity. So by telling us what type of a structure that you have in place on this form, we allocate the correct forms to you for the rest of the collection. If we get it wrong on this form, it means that when we find the error later on, you get allocated the forms much later in the process and you have a very restricted period of time to complete them. So it's in everybody's interest to get this form right first time. It covers 4 main areas, and I'll talk about the red line in a moment or two's time. 4 main areas. Part A covers the RSE licensees, so the trustee ownership, profit status and board structure. That's a fairly static piece of information, really. We wouldn't expect that to move too much over time. Part B looks at the membership base of the trustee itself. Again, a fairly static measure. Part C looks at what defined benefit environment the fund has the trustee has in place. So that could be a dynamic measure if things change in your defined benefit environment. So if, for example, a new sub-fund is established, or if a sub-fund is wound up, or a fund itself is wound up. And Part D, another dynamic part, is about the MySuper product and life cycle stage environment. So, for example, if you have received authorisation for a new MySuper product recently, that's going to move. Equally, if you've changed your life cycle product, so that your life cycle stages, so that they've changed over time, this is going to change as well. So 001 was reissued in June 2014 to remove references to select investment options. And I think I've done select investment options to death already. But suffice it to say that when they come in, when that goes live again next year, select investment options will be added back into 001. So you'll need to tell us about the different select investment options that you have within your environment so that we can receive the correct reporting on that as well. So the right forms can be allocated and you can report correctly. So 001 is to be submitted within 28 days of each 30th of June. This isn't one that has the extra 7 days on it. And Jimmy is quite right. It's clearly the 4th of November rather than the 5th of November, but we will confirm that in writing. It's also required to be submitted, and this is crucial, within 28 days of any change to information in Parts C and D. So if your defined benefit environment changes, or your MySuper environment changes, and in future, Part E as well, your select investment option environment changes, you must submit a new version of 001. And the way that happens is that you will notify APRA of the change and we'll reissue a form to you so you can submit 001. Common pitfalls so far that we've observed, apart from the non-submission of of information within 28 days of a change. That's clearly a problem that we need to solve over time, but as people get more used to using this form, I'm pretty convinced that that will actually happen. Common pitfalls would be around membership-based confusion. So really it appeared people were getting confused between corporate, industry and general bases. Those are the 3 of the 4 categories that we have there. So we've issued, within a revised version of 001, a reporting hierarchy there, so you can determine, using essentially a decision tree, as to which box you fall into and report that accordingly. Based upon recent submissions, that one does appear to have improved. Missing MySuper products. Well, when a new MySuper product is authorised, APRA issues the authorisation, so we do know it's happened. And in a number of cases, we're not having that reported to us. So I suppose you could argue that we know about it, so maybe we should have it ourselves, but we've asked you to submit the form so that it's complete for our records and we can allocate the right information to you in D2A. RSE licensee ABNs in the RSE ABN field, and that's a lot of RSEs and ABNs there, is essentially what I'm saying is we're putting the trustee ABN in the fund box, or the trustee ABN in the MySuper product box, or the fund ABN in the MySuper. Confusion, essentially. So let's get the ABNs correct. It sounds fairly simple, but it's quite disastrous for form allocation purposes and results in a squeezing on the time that you have to complete a form later on in time. So it's in everyone's best interest to get those correct. Non-unique life cycle stage names or identifiers. So what we want you to do, and what the instructions ask for, is that for each life cycle stage, you allocate it yourself, its own serial number essentially, so that you can identify it through time. So regardless of whether you might change the name of it later on, that unique identifier remains the same. What we've seen is, in some cases, the same number being used for more than one life cycle stage, which is obviously that's not appropriate. And secondly, that the serial numbers have changed over time, which again, if it's a unique identifier, it should follow through over time. I think hopefully that's a teething problem, and we can get past that over in the next rounds of submissions. The consequences of all of this, though, really are lots and lots of resubmissions of 001 and fairly compressed timeframes at the other end when we've allocated the correct forms to you. So we really don't want to push you hard at the reporting end of the period. We'd like to make sure that we get this right first of all and allocate the correct forms to you. If I move on to MySuper asset allocation, so 533, so that's a MySuper form that covers in three specific areas: strategic asset allocation, actual asset allocation, and then movements in directly held and indirectly held investments. It's used for our purposes, so for prudential purposes, prudential supervision. It's published, it's intended to be published, and it's also used for ABS purposes as well, for consolidation across the industry as a whole. Now, the common pitfalls that we've observed on this form are some fairly simple ones, so things like strategic asset allocation not summing to 100%, and not as a result of rounding either, so fairly big holes in a strategic asset allocation. Now, there's validations on that, and there's also queries that you'd expect to receive if that happens, but it's obviously much better to get that right without the result of a query. Dynamic asset allocation approaches and benchmark asset allocation. So this relates to the concept that perhaps not everyone considers asset allocation in one way. There's more than one way to skin a cat here. And rather than considering the strategic asset allocation approach that's outlined essentially in the reporting instructions, it may be that your RSE licensee uses an approach such as dynamic asset allocation. Now, in that case, we've got a specific frequently asked question, FAQ 96, and I'll tell you later on where you can go to access those, that explains to you what you need to do in that case. And the specific question here really is, in the case where we don't have a benchmark asset allocation, instead we have just ranges, how do we complete 533? And there's an answer that tells you exactly how to do that there. Now, allocations to equity without listing or domicile type. So this is where, for example, an entity has reported that they have a sum of money against just equities in general, when in fact what we really need to know is whether that's an Australian equity portfolio or an international equity portfolio, and also whether it's listed or unlisted equities. Now, it's not acceptable to APRA for your trustee not to know what it's investing in, particularly in terms of an equities portfolio. So that information does need to be obtained and submitted. And what you would have seen if you were in this position was you would have received a query, and that query will have been fairly persistent until you got that submitted to us. Difficulties with reporting of investment movements. Now, there's a component of the reporting instructions here that accepts that in indirectly held investments, so investment vehicles, when you look through, it may be difficult to determine exactly what the different components of investment movement have been. So income, realised and unrealised gains and losses, might be difficult to attribute those precisely. And instead, it's perfectly acceptable for you to use our allocation approach, which is set out in the instructions to 533. And there's also an example, if you would like, as well, in SRF 530.1, which is that's investments and investment flows, that details exactly how to do that with a worked example. And finally, I think I should really mention that a response to queries along the lines of this is the information that's been provided to us by our custodian, it doesn't wash. It results in a follow-up query. So I think if we can try and remove those at the outset, that saves everyone some pain later on in time. So the consequences of some of those common pitfalls, again, have been a significant number of resubmissions. And actually, the other consequence has been a large number of frequently asked questions on 533. So again, later on, I'll show you where those are. Now, moving on to two other MySuper forms. First of all, we'll look at the product dashboard form, MySuper reporting form SRF 700. Now, this is a fairly formulaic form because it essentially asks you to tell us what you've got on your product dashboard. So it looks at the return target, the comparison of return target with actual return, the level of investment risk in that MySuper product, the statement of fees and costs, and then the extra bit that's not on your MySuper product necessarily is in terms of information about life cycle stages there. It's used for our purposes, it's used for publication purposes, and Greg mentioned that this is some of the information that we're looking to publish fairly soon. And it's also used for ASIC purposes as well. This is one of the forms that's given, I think, the most trouble to industry, which there's if I give you some context, there's 117, I think 116 now, 116 MySuper products out there in the industry. And the level of, for example, the level of investment risk has been resubmitted 135 times, so more than once per product on average, although of course not every trustee has resubmitted. A number of them have resubmitted several times. Now, that's information that you disclose to your members on the MySuper product dashboard. So either the dashboard's changed, and in which case that's absolutely fine. We do want to see a resubmission where information on your product dashboard changes. Or alternatively, it's the case that it wasn't correct the first time, or maybe the second time, or even the third time around, and that's not what we're looking for. So a certain level of change there is acceptable across the industry, but I think what we've got is a problem that we need to solve there. Some of the common pitfalls here, so I'll talk through. So incorrect return target calculation methodology. So first of all, just to focus on this. So the return target for the product dashboard purposes, as defined in the Corps regs, refers to SRF 700. It's kind of a circular argument. You come back to the reporting standard here. And the instructions they read, this should be the mean annualised estimate of the percentage rate of net return that exceeds the growth in CPI over 10 years. So you may not agree with the methodology, but misreporting it's not the answer. And I think the answer here is that when the choice product dashboard is consulted upon by Treasury and the government later on this year, there's the opportunity to make submissions around what a return target should be, maybe what it should be called, and how it should be described. But at the moment, we do need to see consistency across the industry there. So if you're calculating your return target on a different measure or a different method, it needs to be calculated in line with the instructions and reported as such. Inconsistency between the level of investment risk reported to APRA and published on the website. So just to give you the indication here that APRA and ASIC do share information, and where we're noticing that information that's being disclosed to members through a product dashboard itself is different to what's being reported to us, that's not acceptable either. That needs to be corrected and resubmitted. And thirdly, I suppose more of an area of administration here, so no minimum and maximum ages for life cycle products. The instructions here are clear to say that if you have one of your life cycle stages is up to age 35, and you don't have a minimum age in that, it's absolutely fine to leave that box blank. In fact, that's what we want you to do. We don't want you to try and put 0 in there. And similarly, at the other end of the scale, if you've got a life cycle stage that starts at, say, age 60, you don't need to invent a maximum age for someone to live to. We're not clairvoyant, I suppose, so you just leave that box blank. So the consequences of these common pitfalls have been, again, as I mentioned before, a significant number of resubmissions of this particular form, in particular the investment risk label. And actually it's resulted in delays in the ability for APRA to publish the MySuper data, which, of course, that's poor for us, but it's also poor for the industry because it means that you're not having that information out there to be able to consume, to analyse and to look at, which really is one of the key tenets of the government's reforms here, is that the information that's provided to us is published back out to the industry. So we'd like to see that happen as soon as we can, and getting that data right first time around helps us out with that. If we also then secondly move on to 702, so that's My Super Investment Performance. Now this form it's really targeted at looking at net investment return and net return to members, so outcomes to a representative member. And we recognise that representative member has its own challenges. In doing so, it requires to understand the investment, administration and advice, fees, costs and taxes. Again, this one's used for our purposes, it's used for publication, and it's used for ASIC as well. Now, some of the common pitfalls with this one, first of all, double counting of fees, costs and taxes. So if you are in the situation where, for example, you have an administration fee that has a dollar amount per week component and also a percentage of funds under management component, we don't want to see the dollar amount per week component also, if you like, converted into a percentage of fund basis and added on to your percentage of fund basis as well. We only want to see the right components in the right boxes here. So we'll issue a frequently asked question in October to make this absolutely crystal clear that we don't want anyone to double count the fees that they have there. It's in no one's interest to have that happen, because of course when this information is published, it will make your product look particularly high in terms of fees, and of course we'll have a resubmission fairly soon thereafter, we would expect. Unrealistic net investment return and net return outcomes, and this is a broad theme that I'd like to just touch on, which is reasonableness checks. So we've had a number of returns that have been submitted first time around where the investment return just looks completely out of line with what you might expect. It's not in line with the market, it's not in line with other providers with similar types of products. And upon questioning, it turns out that actually it was just a mistake. So really there is a role to play in looking at your data before it's submitted to make sure it looks broadly reasonable, particularly in terms of things like investment returns, etc. Inconsistencies in accrued fees reported. So we have a reporting practice guide 700 that I mentioned before, and that envisages that some fees such as administration and advice might in fact be charged annually rather than on a quarterly basis. And per the instructions and as per the reporting practice guide, those fees, costs and charges and taxes should be divided by 4 for quarterly reporting, so a fairly simple methodology. We know that's contrived, but that helps give consistency across the industry. We don't want them all reported in Q1 and zeros for the other 3 quarters. It becomes very unwieldy to unpack that, and also it means that when that quarterly data is published eventually, it'll make your product look very much out of line with the rest of the market, and it won't really be a fair representation of how things are being incurred there. So that brings to a close my observations on some of the key forms that have been reported so far, and what I'd like to do now is open up again for questions on what's been reported to date.
RF 001, you made a comment that it was APRA reissue a new form when you've got the ad hoc reporting for changes. I believe we were just advised that we resubmit the original one because there's no other form, and APRA advised us to resubmit. I
do apologise, you're quite right, it's a resubmission. Yes, that's right.
Any other questions from the floor?
With the 533 asset allocation, you said the response to queries, this is information provided by the custodian, is unacceptable. What if the custodian comes back and says, this is what we got from the fund manager, and it's through AUSMAC, and we can't check that? So it'd be very difficult.
I suppose you've kind of hit the nail on the head there, which is, if that's the case, and you are essentially accepting information at face value without the ability to check it, that's one of the reasons why the collection has been put in place, is to try and change those practices so that a trustee and its management team can obtain a better understanding of exactly how things are operating within the fund itself. So in those cases, we really need you to push your custodian to find the information and to provide it through to you so that you can understand the through flow of information at the bottom end. And in practice, what that means is that there'll be the annoying situation where you will receive a query and then a repeat of the same query, essentially asking you the same question. What we'd like to try and do is avoid that by getting the right information first time rather than second or third time around. Recognise that for the industry, it is quite frustrating to receive a large set of queries, and anything we can do to try and knock out some of those queries at the initial stage would be positive for the entire industry.
We also are expecting that funds might look to perhaps even their contractual relationships with different service providers to ensure that those arrangements provide for them to receive information that is now required on these returns. We understand that in some cases there's been an historical practice, contractual arrangement was set in place, this data has been provided for years, the framework has changed, and so our expectation is that over time, if some of those contractual arrangements are preventing or don't require that data to be provided, then they will change as well, so that people are pushed. So I think the message really that we're giving is we really want funds to push all of their service providers to provide the information that we're looking for on these returns. And there is certainly some realisation within APRA that this may take a little while to get in place, but we're encouraging people to do it as soon as possible so that we can get that data.
Tony?
Mike, you mentioned there's been delays in the publication of My Super data. When does APRA expect to be able to publish that information? So,
Jim, I think we're expecting that late this month or early next month we'll be able to issue a response to our discussion paper. And we're in the final stages of finalising what can be published and what can't be published. I think you'll be well aware of the discussion that had gone on with industry around different components of industry about the confidentiality status of certain information and its commercial sensitivity. We're almost there with that, but it's fair to say that's taken much longer than we'd hoped it would. And I think that also that components of the industry hoped it would as well, because this information I think will be valuable to all stakeholders across the industry, and we're actually very eager to get it out there. I think it should be quite useful.
So that's also a dependency, not just the data coming in and the quality of it, but also...
Correct. So the finalisation of our consultation on confidentiality of data is another stumbling block or another roadblock before we can release that information. So first of all, you're quite right. Deal with the data quality and make sure that what we're putting out can be deservedly trusted and relied upon. And secondly, make sure that what we can put out is acceptable to the industry as a whole.
But in terms of release of data and beyond My Super, there will be a two-stage process here as well. We will be making determinations mainly around My Super as part of this first release, and still be conducting further consultations with industry on broader release of data beyond My Super. My Super situation is clearer because, in our view, the legislation is much clearer. It requires us to publish. And so there have been arguments put to us, well, it should be confidential, and arguments have been put to us as to why it shouldn't be made public. And our response really is the government has asked us, legislation requires us to. So it's, unless the legislation changes, we will be publishing that data. We will be determining it to be non-confidential, and we will be publishing it, except for those few small items where we believe there's a reasonable prudential reason for not publishing. But there will be continuing consultation with industry about publication of non-My Super data as well, because there are still aspects of that where a number of funds have argued commercial detriment, and we still need to have discussions and understand what that is. So we really need to talk very closely with individual funds and talk that through with them.
Okay, I've got one question on the web, sorry. I've worked out how to get back to the screen I should have been at. Nepean Hyun asks, as the SRF 001 form drives the forms that are required for the RSE to submit, such as the RF 160, how long does it take for D2A to be updated when we submit an ad hoc SRF 001?
So it's, well, let me just go behind the curtain here and explain what actually happens. So there's a process that's involved with the person involved as well. So you don't get the situation where just because something's been submitted on 001, you automatically get allocated something that might be wrong. So a person does check that first of all. We have an intermediate step. And it's a fairly swift process. So when 001 has been allocated, it should be fairly soon thereafter. I don't have the number of days to hand, unfortunately, but fairly soon thereafter you should be allocated the correct forms. Now, that's how things now will work with the new version of 001. And I think it's fair to say that with 001 as it was last year, that process wasn't as smooth. And the reason being,
from personal experience there, that when we resubmitted the 001, I think it took at least a week to get some new forms out. And
I think that so if I can speak candidly, that's because in certain cases we weren't convinced that we were receiving the right information, and so therefore it required a cross-check of all of our information before we could reissue D2A forms to people or issue new D2A forms to entities. That process should certainly speed up now, and when you get to the next iteration, so from 1 July 2015, when you have select investments on there as well, we expect the process should run equally smoothly, because that's a fairly straightforward process to understand what you're telling us and what therefore needs to be reported.
Okay. And just on a slightly different topic, I think some of you may know that there was a session similar to this run in Melbourne a couple of weeks ago. One of the comments from that session was that given the number of common pitfalls, whilst that might be a reflection on the people preparing and lodging the statement, it's also perhaps a commentary on the way the instructions are framed.
And I think we did have a very good discussion in Melbourne around the language in which a set of reporting instructions, so a legislative instrument, is put together, and also the value that could be found through, for example, our reporting practice guides. So we have, I think I've mentioned it a couple of times already, and I will also talk about it at the end of the session today, SRPG 700, which talks in a slightly different language to a reporting standard. Reporting standards have to be, by necessity, fairly short and punchy. They are legislative instruments, and they have to be framed in a certain type of language, which I think it was explained in Melbourne, taught perhaps to a statistician, but maybe not to someone within the business, and I understand that. So when we issue frequently asked questions, that gives us the chance to be far more verbose and to give examples. And similarly, where we do reporting practice guides, again, we can issue worked examples as to how we would see this work in specific scenarios. Now, we're never going to get to the situation where a reporting form, set of instructions and our guidance can cover absolutely every scenario. And in some cases, a judgment call it's appropriate to be made. In other cases, it is appropriate to approach us for an individual reporting solution, and that super statistic at apra.gov.au is the right mechanism to do so.
Okay. Can we head into the third session?
Great. Thanks. Okay, so we're in the home straight, and I'll talk to you now about our current areas of focus, and I'll really major on frequently asked questions here. So we'll look at recently issued and soon to come frequently asked questions. So recently issued frequently asked questions, and what I'll do is I'll just give you an idea as to what sort of areas they've covered, and then at the very end of the session I'll tell you where you'd go to find them. So our recently issued frequently asked questions in July and August. We also issued a set earlier this week as well, so I'll talk about those in a moment too. They've covered, the main areas they've been covering have been defined benefit reporting has been a fairly major element of focus for our recent frequently asked questions. So depending on whether you have that defined benefits within your particular portfolio or not, this may be of interest or not. And some of these will need to be information that you would discuss or refer to your actuarial advisors or your actuarial team, because they are quite specific. But we've looked at things like the effective date of various different funding metrics and the differentiation between what we determine as defined benefit members' benefits and vested benefits. Now, look, I won't go into the detail of that right here. What I will do is I'll refer you to the frequently asked questions to ask those, to read those, and to refer them to your actuarial teams. We've also issued frequently asked questions on SRF 331, which is services. So services collects information on everything that the RSC licensee does for a fund and everything that other external providers do for a fund as well. It's specifically designed in mind to think about what happens for the RSC itself. So it's not really looking at things beyond the RSC, it's thinking about what affects the RSC, so the fund itself. So we've issued frequently asked questions that look at the degree of flexibility available here in reporting to us under 331. And essentially we're telling you where there's scope for judgment and where there's not. And really what this is breaking down into is, does APRA want to know about the person who comes along and changes the toner in your photocopiers or not? Or actually, are we really more concerned about fundamental issues that affect your fund? And the answer, I mean, it's a fairly simple answer, is that really what we're intended to collect on this form is information that actually affects the operation of your fund. So, for example, if you commissioned an actuarial provider to undertake an asset liability modelling exercise for the fund, clearly that affects the fund, and we'd like to know about it through 331, so you wouldn't be required to report it there. Whereas if you've got someone who comes and waters the plants every week, we don't really need to know about that because that's not about the fund itself. So that's the delineation there. Now, people did raise in Melbourne that actually some trustees and some businesses are uncomfortable making a judgment call here. So when it comes down to it, if you're uncomfortable making a judgment call, report everything. We're happy to see everything. It could be quite a long list, we recognise that. So there is that flexibility to make the judgment. There's also a piece of information there around what needs to happen where you have multiple services under one arrangement. So, for example, if your administrator is also your custodian, do we want you to report to us about what happens with the administration sense or the custodial sense? And the answer is we want to know about all the services provided by each individual provider. So we'd want to know that that provider gave you administration services and custodial services. And where possible, we'd also like you to break down the expenses incurred, or the costs charged across those two different arrangements. Now, in some cases, you might have a service contract, service agreement that doesn't break it down, that just gives one number for the entire service provided. And in that case, we'd like you to make a reasonable approximation, an estimation, or if you're really uncomfortable doing that, report it against the primary service provided. So if you really can't make a determination as to what a reasonable split might be, in this case, allocate it all against the administration service. However, you would still have a line in the form that would say this provider also gives us custodial services with a 0 in the box for the amount there. 532, so investment exposure concentrations, and 534, derivative financial instruments. We received a number of questions from industry around how they should tackle the issue of having multiple counterparty credit ratings. So the instructions there say if you have different counterparty credit ratings, so if you have a rating from different ratings agencies for a particular counterparty, you should report to APRA the lowest of those. So essentially take the lowest common denominator there. Now, the question's been asked, what if we don't have multiple? What if we've only got one? Do we need to go out and search for more ratings and then give you the lowest? Or can we just report to you the one that we hold? We're not intending to ask you to go out and search for more ratings. Just report to us the one that you hold on file. That's fine by us, and that reporting FAQ will be reflected within the instructions themselves later on in time, so you can see them there. 533, asset allocation and derivative exposures reporting. Now, we covered this in some detail in June at our sessions. We've also covered this in Melbourne on last week. There was an error in our instructions, and FAQ 97 gives a very clear explanation as to how this should be reported. So what happened here is that the reporting instructions said exclude derivatives when you're reporting to us on 533, and in fact what they meant was include derivatives. Now, we recognise that that's not something you can just change overnight. In fact, that's going to take some time for your custodian, for your fund managers and so forth to provide the information. So we want the industry to report to us on a best endeavours basis for now on that one. But that will be reflected will be represented in the reporting form and instructions by 1 July 2015. So you need to be ready to be able to report to us in line with the instructions at that point in time. So I suppose fair warning on that is being given. 601, which is profile and structure for an RSE, so not for the trustee but at the RSE level. A question was asked as to, because we are reconsulting on the definition and the collection for select investment options, do RSE licensees still need to report the different select investment options that they had under the old definition within 601? So I'm being quite specific here, but the answer is yes. And the reason why that is the case is because there's some prudentially important information around stress testing within there that we still need to receive. And also we need to know what the size of different select investment options are under the current definition so that we can essentially stress test ourselves, or scenario test, if we were to move anything to do with the thresholds around the definition of select investment options, so what that would mean in terms of visibility of the reporting population as a whole. So simple answer is follow the instructions please on 601. 700.0, that's the product dashboard that we've already talked about. So because it's serious enough that we felt the need to do this, we've actually reinforced the the instructions, we've essentially restated the instructions in a frequently asked question there in terms of the return target calculation methodology, so it can be crystal clear that other methodologies are not acceptable there. You must follow the instructions. I'll move on to upcoming frequently asked questions, and actually this slide was drafted before our session last week, and since then we've issued some of these, so you already have them in the marketplace and you can read them. So there will be a further set that will be issued that will cover the bits that you haven't seen here so far in early October. So these again they've got a fairly heavy defined benefit focus to start with. They look at minimum benefits metrics where you haven't recently conducted an actuarial valuation. They look at member segmentation, and what we've done here is we've provided flexibility to the industry for a transitional period where you're required to break down your members' benefits into, for example, different age components, rather than that being constructed with reference to defined benefit members' benefits, which is I'll be quite technical here, which is if you like, a forward-looking present value calculation that an actuary would need to actually conduct for you. You can use vested benefits, essentially, that you can extract from your administration system, or with minimal actuarial calculations, as a flexibility over the course of the next year or so until, and again I'm getting quite technical here, until you move from reporting for your financial statements under AAS 25 to AASB 1056. At that point in time, our flexibility will end, and the frequently asked question, I think, is really something for you to refer to your actuarial advisors to make sure that they know the flexibility available to them in calculating this information for you. We also have a question there around non-member liabilities. So, for example, if you can't allocate a specific liability to a particular member, it's acceptable and there is flexibility built into the reporting collection for you to allocate that against, if you like, the other component. And we've just restated that to make sure people feel comfortable doing that they're not, if you like, going against the requirements in the reporting standard. There are a number of questions around self-insurance. I won't go into the detail of those here because they are quite detailed and technical. And again, they're really for your actuaries to consider. 330.1 and 330.2, so that's the statement of financial performance for a defined benefit subfund and for a MySuper product. Information around members' benefit flows, so item 1 on that form, which is to be calculated net of contributions tax, and then other items on the form which are to be calculated gross of contributions tax. So essentially what the frequently asked question does is just restates the reporting instruction, but in different words, so it's a bit easier to unpack, because we talked before about the language used in reporting instructions and the valuable nature of a frequently asked question in clarifying that. Reconciling investment flows using the allocation approach on 531 and investment flows, and 533. So validations between information reported on one form and on another form. There were several questions that were raised as to whether certain things should tie together when in certain circumstances, and again, I probably won't go into the detail of that right here, in certain circumstances it wouldn't be possible. And there is flexibility built into our collection. And if I refer back to what Greg mentioned earlier on, so the different checks that we apply, so if we have validations that are built into D2A, we have queries that our administrators issue, and we also have queries that our supervisors might come to you with. Those validations within D2A are on two different bases. They are either mandatory, which means that basically you can't submit the form if you haven't met the rule, or they're confirmatory, which means that even though you haven't met the rule envisaged by the form, you have the opportunity to explain why. And assuming that explanation is clear, then you should expect to receive no query. If that explanation is not clear, or actually we can't understand why the circumstance would prevail, you may receive a query on that. And in this case, it's a confirmatory situation, so if you're in the case where you can't get the two to balance, that's fine, and you just explain why and we can move on with it. And finally, there's a frequently asked question that will go out on the timing and process for wind-up returns, just to make sure that everybody is clear that a wind-up return is required within 3 months of the date of the wind-up, not 4 months. So it's not the same as an annual return. It's different. It's only 3 months after the end of the wind-up. So I've just fired a lot of information that's going to be provided on our website or is already there at you. But what I'd do now is I'd just pause for questions and comments on this third segment, so information that, if you like, that we've recently released through our frequently asked questions, or anything else that you'd like to cover. And then what I'll do before we finish up is I'll just run through where some of those resources are so you can find them for yourselves.
Just a general question on the general resourcing within APRA and its interaction with us in the industry and the service providers, because, dealing with the tax office, for many, many years, and they've sort of refined their interactions with the tax agents to a degree that we've got the portal and we've got things that we can go in and get access to a whole lot of information. Where I found dealing with APRA is, we shoot off the email to Statistics, and then it takes, 10 days, 2 weeks, something, an email comes back. It's very impersonal, and it's very much, and I'm not being critical, I'm just saying it's like a concrete wall. It's very hard to penetrate. So I'm just wondering whether APRA's sort of addressed that issue at all.
Well, I'll go first, and I might hand to Greg as well. So I suppose, first of all, that it is fair to say that APRA is a significantly smaller agency than the ATO. But, setting that aside, yes, so we have various different means that we try to deal with questions raised by the industry, and today is one of those means. I think we get a lot of value out of this, and hopefully you as an audience do as well, the opportunity to ask questions and see some of the bigger picture issues in one go in a room. But when it comes down to something very specific, often, and I think it's fair to say, it takes some time to work through that query, and although we get through them as quickly as we can, as you might expect, there's a significantly high volume right now. No excuse, because of course you still need to report at the right time for us, and we expect you to stand by that time frame. So I suppose what I can probably say is that recognising the high volume, APRA's put a fairly high priority on resourcing the answering of statistical queries for superannuation. And that might be to the detriment of other industries for a short period as well, because whilst we're focusing on superannuation right now, we have to pull resources towards that. And when it comes to it, some of those queries, if they're quite complex, they sometimes require interaction between the rest of the organisation, and sometimes even with external agencies. So in certain cases, and as referred to by John before, very good relationship with the Custodial Services Association, where if a very specific queries come up, and we expect that it might actually reflect a problem at more than one entity, even though it's only been raised in one place, what we'll do is we'll test it with them first to make sure this is a solution that would be appropriate for the entire industry rather than just one provider. So I suppose what I'd probably answer is that in some cases there's a very good justifiable reason for why this might take some time, because we're trying to do the right thing. In some cases there's a volume and capacity issue, and I think that's what you're raising. I think it's worth acknowledging that that is the case. In all cases we try and get back to you, and we do try and give updates as to when things will happen, but I think it's probably fair to say that I'd take that back and feed that to our teams, that maybe one of the areas we could focus on is communicating better with you to let you know where we are in the stage of providing you that update. So I think that would be helpful to everyone as well.
I think we're aware of the fact that things perhaps could have been handled a little better there, but the level of queries has been difficult for us to handle with limited resources, and APRA's budget is not growing. And I think one thing that would be useful again from industry to assist us is to get in early. I realise that that's not always possible, but it certainly helps us if people can get in early with their queries as well.
Yeah, and I suppose reflecting on that as well, we recognise that when it comes down to it, there are a number of different projects that your entities had to focus on over the course of the past 2 years, and that reporting, a set of reporting requirements that really would commence in 2014 couldn't possibly have been the priority in late 2012 or early 2013. But when it comes down to it, I suppose Greg's right, the earlier the better, and so I suppose I'll keep encouraging you, particularly when it comes to the select investment option reporting collection. If there are any very specific questions on how the instructions might work, or how a particular scenario might work there, we would certainly be open to receiving those sooner rather than later, and even sooner than before it's actually released into D2A. Now, I recognise that some of your entities might not be able to commit time, and for example, system builds, etc., won't happen until D2A actually has the form available. We recognise that, but it's still worth reflecting on the written form and instructions that are available on our website, which we will make available, because they're essentially a representation of what you'll see in D2A. So that is available as a resource early.
I must admit, I see it as a path towards maturity. I mean, really for APRA and for the superannuation industry, we're both in our infancy in this process. If we look at the banks and the insurers, they have whole teams of people devoted to APRA reporting. In super, we're used to running a fairly lean shop, and therefore most of us have had to scramble and scrabble for resources to meet the extra burden of reporting. On the other hand, I can also say from a very personal experience, we had our administrator ask a query, and to paraphrase the response, it was reread the instructions. So, yeah, there might be some communication issues there. And we've still got plenty of time if there are more questions.
Please don't be afraid to ask questions. We're here to talk candidly, so please, if you've got some feedback that you'd like to give, please do.
My question relates to the previous segment, actually, where you mentioned APRA is talking to ASIC. Is there, when we lodge a PDS in use with ASIC, is that something that APRA is aware of?
So when you lodge a new PDS, you mean?
Correct.
Yeah. So first of all, there's no automatic feed about when a PDS is updated that comes straight through to APRA. However, first of all, there are legal mechanisms by when some of the information on the PDS is changed that it's required to be reported through to us, particularly on SRF 703 fees disclosed. So we get that information come through early on. And if your question is really how do we know whether 703 needs to be... Well, there you go. It sounds like I'm hitting the mark.
That was my question.
Yeah. Okay, so how do we know when that needs to happen? Well, in actual fact, we, to a certain extent, we rely on after-the-fact detection on that one. So at the moment, we don't have an automatic feed that says a PDS has been reissued, so therefore 703 needs to be submitted. What we do rely on is as an entity telling us that you need a new version of 703 to be able to complete. Now, I suppose that's imperfect, isn't it? Because we could be missing some of the information, and we do rely upon the industry to keep us up to date when they need to, when they're required to. Now, we don't want to be taking enforcement action on that, so of course we'd like you to be doing so, to be complying with your responsibilities per the Corps Act and per the reporting standards as they stand, essentially without our intervention.
Anything further? Okay, well, I might hand over to Mike because he's going to give us a few references to resources.
Thanks. So I will bring us home now with, I suppose, a flag towards some of what we hope for you is helpful resources. I'll look at frequently asked questions and I'll look at SRPG 700, which I've mentioned both of them several times throughout the presentation today. Frequently asked questions, and this might be a bit too small for you to follow, so what I'll just do is I'll just describe it as we look at it on our slides, and then when you get back, anyone who hasn't previously accessed the frequently asked questions, I'd encourage you to have a look at them fairly early on. Now, we have 114 reporting frequently asked questions. They are resources that have been developed in conjunction with the industry in relation to information that's been passed to us or questions that have been asked. In many cases, we receive information submitted to us that appears on the face to it not to have reflected what's in a frequently asked question. Now, frequently asked questions don't form part of the law, so you're not obliged to comply with them. However, we'd like you to comply with them on a best endeavours basis, and in many cases they're not about complying, they're about giving you extra information to explain what we mean when we say something. So that it's very much in everybody's interest to read these and to be familiar with what they are. They're divided up broadly into the different types of forms or the different types of reporting. So, for example, there's about 15 questions on investment-related reporting. So if you're looking for something specific, hopefully it's not too hard to find what you're looking for. How to access them? On our website, for those of you who are familiar with the APRA website, there's a ribbon that runs across the top. It has the different industries on that ribbon. Superannuation, if you hover over it, brings a drop-down menu. And one of the first elements on that menu is current reforms. In fact, it's the very top element there. Current reforms talks through as a page all the different things that we've introduced recently. So it looks at reporting, it looks at prudential standards, prudential practice guides, MySuper and SuperStream. In the reporting framework element of that page, at the very end, there's a link that will take you to the reporting frequently asked questions. Similarly, if you wanted to find some information out about a prudential standard, there are around about 50 frequently asked questions on prudential standards too. So there's an element for each of the components of the new framework we put in place. Now, we get varying feedback on the usefulness of our frequently asked question process. And one of the really useful pieces of feedback recently was that people would like to receive an update, an email, when we update frequently asked questions and when we issue new ones. Now, that process is in place, and you can register for that update by going to the contact part of our page and, if you like, nominating your interest in superannuation-related information. And that means whenever we issue a new frequently asked question, you'll receive an email through to tell you, with a link in it, to tell you where to go. So if anybody hasn't done that already and they'd like to, that's very straightforward. You just go to the contacts part of our web page and you register your email address with us so we can send you superannuation updates. I'll close with SRPG 700, and for those of you who are familiar with it, I hope you find it to be a useful resource in completing 700, 702 and 703. For those of you who haven't looked at it before, I mentioned before this is a very different type of guidance that we produce. It's not like a reporting instruction. It essentially says when we say this is what we mean, and this is what it might mean in these different circumstances. It's got worked examples in it, and it also tells you some of the pitfalls that we could foresee when we were constructing the reporting standard in the first place. Now, in order to access this, it's available in various different places on our website, actually. We've got links in various different places, but the easiest place and the most obvious place you might go to is if you look at our reporting forms and instructions. So I'll just describe to you where you might go here. So on the ribbon at the top, you have superannuation. The third link down is reporting framework. And within there's a link to our reporting forms and instructions. And before you were to click on any of those reporting forms and instructions, there's a link at the top of that page that says, here's where to go for some more guidance information. One of them is SRPG 700. Alternatively, just if you like, in the search box at the top of our website, you can type in SRPG 700 and it'll take you straight to it. It's about 25 pages with a very detailed guidance there, so I hope that's a useful resource to you. And if anyone hadn't looked at it before, I'd like to encourage you to do so. What we might ask as well is for ASFA, as a result of this today, to send round in its next regular updates just a link to where that document can be found as well, so you can have that there too. And that really brings to a close to what I wanted to say today. Thank you very much for the questions from the room and from over the web as well, and for the questions you sent through in advance. I hope it's been useful for you. It certainly has for us too.
You don't quite get off there so easily, Mike, although I've got a question for Greg. When will a test version of D2A be made available? I presume that more roughly translates as, can you provide a test environment?
Yeah, this came up in the June discussions we had. I did have some further discussions in APRA about this. It's something that is not going to happen in the near future. It's very much a resourcing issue for APRA. It's something that would take quite a lot of resources, and we have a lot of other projects on our IT list which are ahead of it. So it's something that is sort of we are aware of. We can see that it would have benefits, but we simply don't have the resources to do it at this time.
Again, it's part of that maturity journey. The ATO has been doing electronic interface for a long, long time with large volumes of people, and once again, as a practitioner, we see the contrast between the ATO and APRA. In this area, APRA's well behind the mark.
As I said, we certainly would see the benefits of it, but the resources are simply not available.
Yeah. Alternatively, you're going to increase our levies to cover it.
Well, we could do that.
We wouldn't stand here and say that.
Industry may not be entirely happy.
Yeah, no, I'm certainly not volunteering. Okay, if there are any other questions from the floor, from the web? I think we've got everything there. Well, I must say, I would like to thank both Mike and Greg for effectively volunteering their time. I mean, someone has used the phrase before, parachuting down behind enemy lines. I don't think it was quite that bad, but I would like to ask you to join me in thanking them for their time today.